What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this past Wednesday, October 19th, Tesla held its earnings call, and this was another great quarter. I know I say this all the time, but Tesla won the decade when it comes to the EV race, and it's becoming more and more apparent with each earnings season. Now, instead of going through just a bunch of numbers, I thought it would be more entertaining to listen to an interview on Tesla's most recent quarter and the commentary around that. This particular interview took place right after the investor deck was released, but before the actual earnings call took place. So that's where the skepticism that you'll hear from Scott, that's the anchor, is coming from in his questioning. I'll add my own thoughts along the way. I clearly have some bias when it comes to Tesla. That said, this is a stock that, in my opinion again, you can buy with your eyes closed every time it sells off, assuming, of course, that you have the funds. Now, don't take this as financial advice. I'm not a financial advisor. I simply have a very strong conviction in Tesla remaining the market leader through the end of this decade, and for that reason, I'm trying to invest accordingly. Now, don't forget to drop this video an early like and subscribe. It does really help the channel and my content gain more exposure. Thank you, and with that, let's roll the interview.
Record number of units, 340,000 units sold, looking to me like a $22 billion quarter, another record, 62% year-over-year growth, and their 13th consecutive quarter of profitability. What's not to like about that story? We'll see, but Tesla appears to be at the top of their game.
Let's quick pause here. Now, in case you didn't catch that, Tesla missed expectations on revenue. Analysts were estimating $21.96 billion, but Tesla only achieved a revenue of $21.5 billion. Of course, I always caution against reading too much into missing expectations. Forecasting is simply someone's best guess, okay? So at the end of the day, Tesla achieved record profitability this quarter. Anyways, let's keep going.
Yeah, what about this idea of being able to hit that target of 50%? On production? Do you think they'll be able to do that? That seems to be the most critical issue at the current moment.
I think they will. And when you're talking about 50% growth, that's in terms of units. I think revenues may be the bigger issue, but I think they will hit 50% for the year. What most people don't understand is most EV makers are struggling now with supply chain issues. They might have one factory, possibly two in place. Tesla has 4 factories fully operational and hitting maximum capability. Q3 could have delivered more units, but Austin and Berlin weren't at full production scope. They will be in Q4. I think Tesla is going to post a huge number in Q4, possibly in the 450, 500,000 unit range. I think they'll be at over 50% unit growth. Again, 62% revenue growth. Nobody else in the auto world is growing at anywhere near that rate, except for the Chinese, and that's where the big battleground appears to be.
So we'll get to that caveat in just a moment. I personally like graphs and charts. It goes a long way in showcasing the level of outperformance when it comes to Tesla versus the rest of the auto industry. The chart on the left is your year-over-year revenue growth, and the chart on the right is your operating margins. Tesla is the red line, and the rest of the industry is in gray. That is the level of outperformance Steve is speaking to. It's pretty clear. But let's continue.
So put that into perspective then, not only the competition issues coming out of China, you've got U.S. automakers obviously ramping up their own EV production. You have the prospects of lockdowns at any moment through the winter or, thereafter in China. That has to have some impact to the projections that the company lays out, doesn't it?
Well, there's lots of things to worry about, including a recession, but you have to ask yourself, who's best positioned to win in each scenario? Again, Tesla has auto factories in Shanghai, in the United States, in Europe. No one else has that. Again, it's also important to note the profitability factor. Industry auto average, 4.3% net margins. Tesla's sitting here at 13 to 14%. So you've got one of the fastest growing auto companies in the world, highest profitability, best brand name. It's going to be awfully hard to displace them. But as you point out, for the first time, I think they have a real challenger. That challenger is named BYD. BYD will likely hit 1 million EV units produced and sold this year. So that's something to keep your eye on. In contrast, and it's just good to compare, Ford probably hits 60,000 units and GM struggling to hit 50,000. They're barely at 4 or 5% of Tesla. So right now, it looks like a Tesla Chinese battle. Volkswagen's in a solid third place. We'll see what they can do globally. But in terms of the speed, it's Tesla and the Chinese.
I gotta say, I definitely agree with those key points, and that's why I'm also invested in NIO. NIO to date has delivered a little over 82,000 vehicles, and they're much smaller than Ford or GM. I don't personally invest in BYD, but if you wanted to hedge your bet on Tesla with another strong contender, personally, I'm also looking at China with NIO versus betting on Ford, GM, or even VW for that matter.
What do you make of the fact that gross margins closely watched in any business these days were a little bit soft?
So again, it's better than it has been, but still better than all the others. I'm not bothered by that in the least. And the reason is Tesla invested hugely in the new facility in Austin and Berlin. Those are now up to nearly full capacity. So that's looking good. They're also quietly putting down new lines for the semi-truck, which they're going to start shipping in Q4, and then the much-awaited Cybertruck that has over 1 million orders. So Tesla, to most any standards, has been investing wisely for the future. Another point that a lot of investors miss is they've already manufactured but not delivered 22,000 vehicles. So literally on day one of the quarter, they're going to start out with a pretty big jump toward what I think is going to be a historic Q4.
So his last comment on the 22,000 cars manufactured but not delivered, Elon actually echoed that during the actual earning call and stated that things were shaping up to be another record quarter in Q4. A few other key highlights from the earning call that you need to know about. Elon confirmed delivery of the Tesla Semi to Pepsi will happen this December, and the truck will have a range of 500 miles with trailer fully loaded. Now, of course, mileage will vary if you're pulling all uphill, for example, but that's still crazy impressive. Ramp up of the semi-production is coming next year. Think about the implications this will have on Tesla's growth and profitability. Trucking is a huge industry, so this one is big. Next, Cybertruck was also confirmed to still be on track for deliveries next year. That, of course, makes me happy as someone who has a reservation. Honestly, can't wait to get mine. Cybertruck is cool, but something even cooler than that and coming sooner than that. Elon explicitly said on the call that the FSD beta software would be available to all Tesla vehicles in the US at the end of this year. This is the version that will literally take you from your driveway to whatever destination you set once you plug in the address. All of the turns, stop signs, red lights, you name it, the car does it. This is incredibly exciting. Now, they won't be able to classify it as level 4 just yet because you still need regulatory approval, but the capability will be there for customers to enjoy it while they go through that certification process. Now, this next one here, this is huge for investor when you think about next year and beyond. Tesla confirmed on the call that its first ever share buyback was being considered to the tune of $5 to $10 billion. This is notable because in the past, Elon did not want to divert any capital away from growing the company. That is no longer a concern now. And if you consider that they're now sitting on a war chest of $21 billion in cash and cash equivalent, they can grow the company and do share buybacks to further insulate the stock price from market volatility. Basically, get your cake and eat it too, which is fantastic. The last item to touch on then is Bitcoin. Tesla still holds $218 million worth of Bitcoin and hasn't sold since Q2. If you invest in crypto and Bitcoin like I do, this makes you happy. I'm definitely happy to see that they're still holding. So if I had to sum it up, actually, you know what? I'm going to let Steve sum it up.
Tesla's way out front on manufacturing capability, way out front on putting supply chains in place, already has agreements with the major lithium producers, the best brand in the world, and a global selling network. So, by the way, they just became the #1 seller in Germany ahead of Golf, not EVs, of all cars. So there's international appeal. They seem to be well positioned for the next year at least. They're going to be tough to beat.
Thanks, Steve. That's very well said. And with that, I'll call it good for today. Don't forget to drop this video a like and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.